obviously, at ScaleView, we work on M&A advisory when companies are ready to sell to a strategic or a private equity group. You've been part of that kind of exit with some of your portfolio companies. How, my first question really for founders is how do exits happen, right? How have you seen it happen in the past with some of your companies who had really great outcomes? And then, maybe you can talk a little bit more about how that process goes. Things like having discipline around financial reporting and things like that really, I know, pay off when it comes time to get involved in a bigger deal like an exit. But tell me a little more about some of your experiences and how they came about and how they went.
Yeah, that's a great question. I would say there's like a couple of types of things that lead to exits, right? There's one type of thing, which is the company's got into a good point. The founder says, hey, I think I want to sell. The investor's okay, this is a good time, it's a good market. They hire an investment bank, run a process, kind of, and like that. And we've had good outcomes from that. I would say like a large chunk of those don't actually end up don't always transact. But we've had some that have transacted and have gotten really, really, really good returns, right? So I think, one misnomer is sometimes companies, they say, hey, good companies only get bought, they don't get sold. And there's a twinge of truth to that, where like, yeah, it's great if someone shows up, but look, if it's the right time for you, right time for your investors, you can sometimes hire a bank, run a process, especially if you've had people that you've kind of had relationships with over the years, and using the bank to kind of formalize and run that process and get really, really good outcomes. And we've had that happen. I think the other key way exits will happen is sometimes industries go through like consolidation cycles, right? Where, a competitor bought something, so then they feel like they need to fill that hole in their strategic roadmap. Big companies do. And these are for M&A exits. We can talk about IPOs if that makes sense, but this is kind of M&A exits. Yep. And, ideally as a company, the founder and CEO is spending time talking with potential strategic partners kind of for years, where they're just, building relationships. Maybe they're a channel partner where they could be co-sell or resell some of the founder's company's products. Maybe they're just straight competitors and it's still worth talking to them, right? Mm-hmm. And, one of them maybe gets wind that you're raising your next financing round, which would set an even higher bar for them to buy it in the future, or otherwise, or they decide it's the right time, or if some market thing happens and they show up and make an offer they think you can't refuse. And then there's a decision point of what do you do, right? And, some of the best outcomes I've seen have come from, saying, that's not really interesting. And then sometimes they come back and double it. Right. And then you really got it. And sometimes this dance happens over, a 1 month period, sometimes over a 6 month period, sometimes over a 12-month period. So this is an 18-month dance. Mm-hmm. And maybe then you say yes, maybe you say no again, and they come back and double it a third time. And then it's like, all right. As that goes, you can then start to get other potential, parties interested. And sometimes you've done this before, you have a really experienced board, you can successfully run this yourself. Sometimes, you'll still get a really high value add for bringing on a banker and advisor that can kind of be that arm's length party that can have the tough conversations with, maybe your future boss, to really drive the price up. But, I think a lot of times when someone kind of comes in, you get inbound interest, that can drive some of your best outcomes. But also realize you can accidentally leave a lot of money on the table on those, where a lot of times the first offer is substantially below what they're willing to go to if you're able to, effectively negotiate it.
That's interesting. We pretty strongly believe at ScaleView that you can't, no banker is likely to sort of dress up a company that's not good to get some kind of great outcome. It's just most buyers are savvy enough to figure that out. But we do believe that good companies get great exits when they run a pretty structured process to get there, right? And so I think if you're a good company, you're pretty likely to have interest all over the place, probably from competitors and partners and growth equity investors and other private equity shops. I mean, those are all groups that are looking for great companies to invest in. But we strongly feel that it's you get the very best outcome if you're able to, as you said, put some structure around it, create some competition around it, create some urgency, even like you said, to get that offer from, okay, maybe double again. You've got to kind of give them a reason to do that, right? And if you just go right down the path, then that reason's not there. The hard conversations one is also pretty interesting. It can be pretty tough to sort of talk about how excited you are about the deal and the merger of companies, and at the same time, negotiate really hard and push hard on different terms. That's something that can be pretty tough for founders to manage as well. What is your, what role have you played as the investor and board member there in helping the founders, think through it and eventually get it done?
Yeah, it totally varies, right? And sometimes it varies on the experience of the team. Like, do they have a CFO that's been through a few of these before or not? I've done everything from be a very active board member, serving as kind of the negotiator, especially when there's not a bank involved sometimes. And then, our team can do some of that work around like putting together, the kind of the funds flow and the waterfall, helping on disclosure schedules, working on management presentations and decks to use in the sales process. I think fundraising is bad, amp it up 10x in terms of materials during a sale, helping to, fill the data room. And these data rooms have thousands of documents, which by the way, start with the end in mind. When you sell a company, the buyer will go back from inception. Their law firm will pick apart every single board minute, every single employee, make sure there is an agreement assigning the company IP. And there are certain buyers that will not close if you had one engineer 6 years ago who you cannot find the employer proprietary information agreement. And you literally have to go track them down and beg them to re-sign it if you want the exit. That's an aside, but
probably more than beg them, probably more like pay them.
Yeah, but potentially. But we'll do some of that. We'll sometimes help the team manage the process so they can focus on the business, and because you have to also close your numbers during an exit. Like, you got to hit your sales targets, to maintain your price a lot of the time. And so, a lot of times I'll help work with the banker, the law firm, as they work through, the legal agreements and negotiations and working capital negotiations and other things, so that the team can focus on, the business as well. And so it really just kind of depends on what they need.
Got it. No, that's really helpful. And that's the kind of ongoing performance of the business is another thing that can be really tough on, particularly on a bootstrap founder who doesn't have a VC on board. It's kind of running the sale process while still making sure the business hits numbers. I mean, that's the most important thing to getting a closed deal right, is continued strong performance of the business.
Yeah, and like I said, we're all on the same team here, and so nothing is above or below us. Like, heck, I've stayed up all night sending out DocuSign packages with signatures and chasing down, the smallest investors to get to the threshold for deals to close. And so we're all hands on deck. However we can help is kind of our typical motto in an exit. Yeah,
awesome. No, that's really, really good stuff, Aaron. Thanks. It's informative. And congrats on having, like I said, been a part of some really nice exits so far.